Hello, everybody. My name is Dimitris Malas, and I'm a journalist for CNN Greece, covering the digital technologies and all that stuff. And also, sometimes they call me to do also talk about investments, like the one talk that we have here, which is the third Plum Talk, okay, which is hosted by Plum. We're going to talk about a little bit more about Plum afterwards. After I introduce the panel that we have today, which we'll have for around an hour, and we will talk about the COVID-19 investor boom, how things have changed, if they have changed. We will see about that. What were the trends? What will be the trends after COVID-19 and all that stuff? I have a very interesting panel with me, which is part of, which is here. We have Mindy Yu, say that right, I think, the pronounce the name. She's the Senior Director of Investments at STAS. I have Alexandros Christodoulakis, who is the CEO and co-founder at Wealthyhood. And also we have, I think it's a little bit our host, which is Thanos Bispigiannis. I cannot pronounce that very good in English, Thanos. Okay, perhaps I will pronounce that better in Greek, but in any case. So, Thanos, he's the head of money at Plum Fintech. So let's start. And what I would like first is to have a small introduction by all of you. And I will start from India about yourself and also what your company is doing. What are the activities? So Mindy, start with the ladies. Let's do it like that. Okay.
Thank you. Hello, everyone. My name is Mindy Yu. As Dimitri said, I am the Senior Director of Investments here at Stash. And for those of you that may not know Stash, Stash is a personal finance app that makes investing easy and affordable for everyday Americans. We have millions of users on our platform today. And from day one, what we were built for was for long-term diversified investing. And our platform offers fractional shares so that people can take small steps to make financial progress, and really to emphasize, you don't need a lot of money to start. And on top of that, what we do is we offer personalized guidance and educational tools to really help our customers make informed decisions that really shape their financial futures. So we're really excited to be talking here today with you guys.
Oh, that's very good. So Alex, your turn.
Hello, Dimitri. Thanks for hosting us. Thanks to Plum as well. I'm the CEO of Wealthyhood. Wealthyhood is a do-it-yourself wealth building app for long-term investors. Essentially, we're guiding long-term investors to build their wealth over time by intelligently investing their money. So this arises from a common problem we see in the current environment. When a beginner investor opens a new trading app, and they get lost across thousands of different stocks, bonds, and ETFs with no idea on how to put these things together. So usually there is no guidance or insights of how to create a long-term portfolio, and you end up holding a handful of popular stocks, gambling instead of investing. So we aim to solve this by taking a more holistic, top-down approach, putting the portfolio in the core of your investing experience, and then adding some interactive guidance and hands-on education, aiming for the beginner and long-term investor.
Okay, Thanos, you're the host here. Okay, more or less. Okay, you're from Plum, so you have to talk a little bit about Plum and about yourself as well.
Yeah, sure, Dimitri. So my name is Thanos, and I'm the head of product money in Plum, essentially heading all the initiatives related to how customers save and invest through the application. And Plum, as a quick intro, right, is essentially the ultimate money management application. Think of it as an autopilot for your personal finances, where customers get to have like a smart saving, investing, and money optimization in a very easy to use experience through the app. Now, Plum started a few years back as like a saving bot, where user can have like a chat-like interaction, and this grow gradually into a mobile app. And since 2018, we have been offering investments as part of the overall customer experience, where customers can grow their savings and also start investing to grow their money further through the application.
So for someone that needs to invest some money, you are the three people that should go and talk to or use their apps, right? More or less. Anyway, Before we start a little bit dive into the subject that we have today, I have to say to all attendees that there's a Q&A section that you can make the questions. You can post them the questions there. We're trying to answer them as many as we could, as many as we can after we finish a little bit talking. And also, but write the questions, because if something comes up that it's relevant to what we're saying, perhaps we can address it right at that point. So let's start a little bit. So I would like to ask Alex and Mindy a little bit to talk about the trends that they saw during the pandemic, during the last a year or so, such as what will be the diversification that we've seen. So Mindy, let's start with you.
Sure. So I'll talk a little bit about some of the behavioral trends and then the investment trends we've seen.
Yeah.
So what's interesting is in the pandemic, we saw, number one, more younger investors coming to the table, really trying to think about how to shape their futures. Second, more women coming to the table more than before. On our platform today, Stash, we have 60% of our investors are male, and then 40% are actually female. But in 2020, we actually saw that increase where the people signing on were 50% female and 50% male. So that's a really exciting turning moment where women are now starting to get invested. And then lastly, we saw a record number of retirement accounts. People are trying to think about how to shape and plan their financial future. I think all of this pandemic was a wake-up call for our investors and people really thinking about how to plan. And now in terms of investing trends, what we've seen is actually people sticking to our investment philosophy here. We at Stash have three pillars called the Stash Way towards investing, and people are actually following and receiving some of the advice we were providing. So we constantly reminded our investors to think long-term, invest regularly, and to diversify, which are really important in times of volatility. People, number one, were staying the course. They were still focused on the long-term and their investment goals. And then secondly, investing regularly. People are still contributing towards their investing, contributing towards their time in the market. And on Stash, we have this feature called Auto Stash, which allows people to set a schedule so they're constantly contributing towards their investing. And we saw a 50% increase in that during that time period. So it's shocking where it's not what you would have imagined. People, instead of shying away from markets, people were contributing towards the market. And most importantly, people were diversifying. They were looking at ETFs. We saw a increased amount of interest in exchange traded funds, which are easy ways for our US investors to kind of think about diversifying is through buying ETFs.
So more women, more diversification. That's really, really interesting. Younger investors as well. Alex, your turn. What have you seen?
Yeah,
what are the trends?
Just to elaborate on what Mindy said with a few numbers, and this is based on market-wide numbers, not wealth numbers. In 2020, total accounts were up by 275% globally. 50% of new retail accounts were opened by investors under the age of 30, which is a huge shift. And this trend also continued in the first quarter of this year. Overall, the participation of retail investors in the market has doubled since the beginning of the pandemic. It was like 15% measured as a trading volume in January last year. It was 30% in January this year. So the impact of the aggregated retail trading is definitely increasing. I would say we have two main trends here. The first is that over the past year, we've seen concentrated allocations and crowded trades. So retail investors bet on big tech, on pandemic winners like Netflix or Zoom, pharma and biotech companies racing for COVID-19 vaccines, new IPOs and electric vehicles. So that's the one trend, crowded trades. The second is that we've seen extreme herd behavior in many occasions. So as retail investors sometimes blindly jump into very popular speculative trends. In March last year, we saw investors buying the wrong Zoom, sending its shares 1,800% up. In April, after oil prices turned negative for the first time, the number of investors holding the US oil fund was 20 times higher than in March, than a month ago. In May, retail investors were buying the herd scared bankruptcy, selling its shares 10 times higher. In summer, this fueled the Nasdaq rally, and we had the recent events with Gamestop, meme stocks, and crypto boom and NFTs. So crowded trades and shared behavior. It's good to consider that investors now have all the tools they need to participate in the market under equal terms. But it's a bit concerning if you think that people are now buying stocks or other assets just because they believe someone else will buy the same stocks and assets, not because they believe there is a fair value or they're undervalued. So there is a detachment from fundamentals. That's a huge trend over the pandemic. So these are the main trends I see here.
Okay, so what we're saying more or less is that there is a lot of changes, there is a change in the behavior, a real big change in the behavior.
Exactly. Okay. People have time, they stay at home, they have money, they find trading and investing also to be a fun game instead of actually building their wealth. And it's a matter then of the trading apps and the investing apps to guide them to the right direction.
Okay, so it's like a gamification, like that, like a game. Okay.
It shouldn't be.
It shouldn't be. Yeah, we will come to that because you mentioned GameStop, and I want also to point that. But I would like also Thanos to a little bit. I don't know if you want to comment or to add something to what Mindy and Alex were saying, but also I would like also from you to give us a little bit. What are the future trends? What do you see come in the next months, perhaps, or the next couple of years, as the pandemic hopefully will wear off?
Sure, yeah, and I hope the same as everybody else, right? So let's start first of all with like the COVID period, right? And I think what Mindy and Alexandros mentioned are fairly consistent to what we've seen as well, right? Now, from Plum, we get like the extra view beyond the investment of being like a more holistic view of customers saving, either through their spending or how much they save, along with their savings in one place, right? And we have also seen like exponential growth from a number of investors, as well as how much existing investors invest through the app. So we've seen these two trends, right? But this is not surprising in the sense that these are driven mainly by two factors, right? One is spending has dropped. Like people had way less opportunities to spend money, right? Restaurants were closed, traveling has stopped. So people were saving more money, but also people were probably like feeling insecure of spending in very uncertain times, right? Around job losses, job security, and all these things. This has driven like an extraordinary level of savings, which we have seen this reflecting on our customers as well. Then there's been a trend for some years now of getting access into investments much easier than in the past, right? And there's like the technology maturing, but also like the information available for people to understand things and start engaging with investments has been getting in a much easier to access level, right? But this has been exponentially accelerated during the pandemic, mostly because people had a lot more time by themselves, you know, and started focusing more on their finances, right? Finances came into the center of their attention during the last year or so. So these two factors essentially started driving people more into using, you know, investment apps as tools to essentially start investing the extra money that they're saving, but also start paying more attention on how they manage their finances, right? I mean, I've recently been reading like an article on Financial Times about like almost $5.5 trillion being saved globally as extra saving during the period of the pandemic, right? So this is like a big part of like savings that are there for customers now to invest and, you know, think how they handle. Now, from a behavioral perspective, we've seen similar trends to what Alexandros has said, right? There's been a lot of push towards technology. We've seen a huge increase on the investments on the technology fund that we offer through the platform, especially in the beginning of the pandemic. And we also saw like an uptick on the investments that happen on the healthcare related fund that we offer on the platform as well. Now, this has gradually started changing towards the latest part of the pandemic, but we saw like a big spike in the first few months.
That was also like an opportunistic, perhaps, you know, view of to invest. Okay, I see that some people that these kind of companies will probably have more revenues and go there and invest. I don't know if I understand that correctly, but
I mean, this may be one factor. The other factor which we account for in our case, right, is a lot of our customers are younger customers, and largely people will invest on things that they either understand better or they believe in, right? So 75% of our customers are below 35 years of age, right? So people know technology, they grew up with internet, they started using mobile phones and technology much earlier in their life. So, putting money on something that you really know and you use like on a daily basis kind of makes sense, like from an individual perspective, right? Now, if it's the right decision or not, I mean, I cannot really advise or comment on that, but it goes back to Alex's comment on, people may not go back to the fundamentals to make like really sophisticated investment decisions, right? And that's where the role of all our investment like apps comes in to help customers make sure that they don't make rash decisions, they don't make decisions that they may hurt their financial circumstances, right? Now, looking to the future now, we've recently done some research with customers, as you know, especially in the UK, things have started opening up. And we've seen that customers do not really look to start splashing the cash that they saved the last few months, right? In fact, more than half of the customers that we interviewed, they said that they don't plan to spend the money that they saved in the next 12 months or so. And also a big percentage of these users, they also plan to target like bigger goals that they want to achieve, like, an upfront mortgage payment or like buying a house, something like more like significant from like a financial target perspective, which I think it's good news in the sense that it feels that people had the opportunity during the pandemic to look into their finances in a more careful way, make like probably better decisions around saving and hopefully around investments as well.
Okay, Mindy, I would like, Alex mentioned before Gamestop, okay, and there was a lot of talk the last months with the Gamestop incident. Let's put it this way, okay. I don't know how you call it. It's an incident, could be. It was all over the news. So, is this a thing with Gamestop that we're talking about the more democratization of the investments or something like that? Because it shows, and you were saying that we see younger people going to invest. Also, we see more female. We see a more different, audience and people, and that they're going to invest. So Gamestop was a thing like that, or it has to do more with the change of behavior of the investors at this point?
I think that's an excellent question. I think it has to do with a little bit of what, obviously what Dan was saying, how there was a lot of time spent at home. People were watching the markets. People were discussing, investments and the financial futures a little bit more. But GameStop during that rally, that market volatility, we noticed that there was a peak interest in growth, especially on our platform as well. I think when you heard about GameStop and some of the other companies within the meme stock rally, there was a lot of interest. Even if you didn't know about investing and what happened with the short squeeze and all the events, people were curious because GameStop is a familiar name. What's happening everywhere you turn, it was GameStop. So I think what happened was there was a lot of attention driven to investing in general, a lot of attention driven to community. And this is all great because you need a event where it drives the attention towards investing, and investing is an important component in wealth generation, wealth creation, maintaining wealth, and having this, even though it was a market volatility and it was a market event, having some light shed on investing was beneficial because more investors came to the platform and many other applications were also experiencing this growth where people wanted to start investing. And what is important too is here at Stash, and this is also why some of the guidance we provide is different. It's because here at Stash, we focus on long-term diversified investing, not day trading. The way we operate, we have 4 trading windows. We don't have any products like options, margins trading. So a lot of the way we're structured, it's geared towards long-term investing and advice. So when we see this surge, we're very encouraged that people are starting to invest, but we want to ensure that, throughout periods of volatility, people stay the course and they follow our investment philosophies. And it was really evident too, during this period of volatility and historical periods of volatility like the pandemic, we've actually sent out education. We sent out, learnings about what's been happening in the market, whether it was with GameStop or COVID. really to surface the information and kind of calm the behaviors of the investors so that way they're not making irrational decisions, emotional decisions that can really impact their financial goals. So a lot of that education, shaping a lot of what retail first-time investors are coming to the platform, I think the benefit is people are coming into the doors, signing onto applications to seek that guidance to get started. And it's a good thing that came out of a negative press in a sense.
Okay, Alex, Thanos, you want to add something to the GameStop event?
Yeah,
Because
I
it was,
like on
it was a
something.
thing of the COVID-19. Okay, and it's at least to someone like me showed that there is something changing in the investment market. Okay, and the GameStop was, the story to point out that something's changed. That's the thing. That's why.
Yeah, exactly. I just want to add that the whole GameStop trade, let's put it that way, was orchestrated by very sophisticated traders. It wasn't the average trader who was sitting at home writing reports about what's the net short position on GameStop or other meme stocks. The guys who initiated the trades were very sophisticated. They could understand what's a short, what's a net short, what's a short squeeze, and what's a gamma squeeze. So once this started unfolding, because they started, but then it was the average retail investor who fueled more money into the trade. Once this began to unfold, everybody could then participate. They have access to information. They have access to, as Mindy said, community and communication through many forums, and they have access to the tools. They have commission-free trading apps, or let's say they're commission-free trading apps that offer options to people who don't necessarily understand what an option is. This means that if you have $10, your effect in the market is many times more than your actual capital. So this magnified the effect of GameStop. At the end of the day, obviously, this was a red flag for the market. It's not something that should happen often. It's not something that should be accepted. Retail investors were able to irrationally trade a stock to take it to the higher level. It's a good thing in terms of the democratization. They have the same tools. They can fight the hedge funds, but it's bad in terms of their attitude towards the trading.
Okay, yeah, the democratization, that's an interesting stuff. Thanos.
So yeah, I mean, it's interesting, right? My comment related to GameStop is, and I may be seeing like things from as a product guy, I like to see things like as a glass half full, right? So there's definitely, it's a very extreme scenario what happened with GameStop, like and Alexandros gave a very good explanation of what really happened there. But I think that the positive side comes down to what Mindy described, right? The fact that GameStop became like such a public event, everybody was hearing about GameStop for like a couple of weeks, around like end of January, February, made people more aware about the existence of investments as an opportunity, right? Now, I'm not saying that GameStop is the right example to follow. I think there is a lot to learn, good and bad, out of the experience. Probably one thing is, things that previously even institutional investors didn't understand, that they are a significant factor on how markets move, which is like the social networking part. It's now something to account for in the future, right? But otherwise, I think what's really important here is there's been like this growing awareness of the opportunity to invest. And as I said before, this is fueled by the technology that has come to mature, both from an application perspective as well as from an infrastructure perspective. Like 15 years ago, you had to be like worth, I don't know, like $200,000 to get like a brokerage account with one of the big banks to even access like this kind of assets, right? Technology allows users now to easily access that with really small amounts of money and get the opportunity of participating in the markets. On the same time, people know how to use technology, especially younger people that get introduced into the markets. But also we shouldn't forget like the factor of the overall like economic environment, right? We've been living for almost 10 years now with really low interest rates, right? So people that are saving, essentially they're losing money every day by getting interest of like 0.01%, right? In most of the banks.
Or so negative in some countries.
In some European countries, it is indeed negative, right? So giving the opportunity to users to tap into the markets to make sure that they don't lose the value of the money that they save, it's definitely like a good opportunity, right? The big challenge there is, as Mindy said, right, educating these users, making sure that they do not get essentially carried away by like the media and the fuzz around people tripling and quadrupling their money by putting a bet on a stock within 2 days, right? I mean, trading, I mean, and we discussed that a lot in Plum, and also how we position that with clients. Right? We're not talking about trading, right? Trading overall, like historically, has been a losing proposition, not only for individuals, but for institutional investors as well, right? We're talking about wealth creation, we're talking about long-term investments, right? It's not about making quick, fast decisions for like the short term. And I think making sure that, you know, everyday people who don't have like the knowledge or the capacity to engage into trading, they really take advantage of the education and the platforms that will help them grow their wealth.
Okay, we'll come to that because it's a really interesting point, but I just want to, you know, to cover a little bit what we have seen in the investments around the world. And I will ask Mindy first. Okay, have you seen any different behaviors between investors from different parts of the world? Meaning that the people from Asia invested differently than the people in Europe or in the US. What have you seen?
I think what we've seen is kind of similar to, I think Alexandros had highlighted a few investments that people are investing in. And I think what's happened is there's been this, again, this community and this highlight on some of the companies that have been doing well in the pandemic and things like that. But by and large, across our platform, throughout the different investors on our platform, we've seen a lot of people invested in diversified ETFs, things that can really, you can put in your portfolio that can hold for long term. Like we have ETFs that hold stocks and bonds within them. And then we have more of the thematic ETFs, again, similar to what all our panelists have said today. People like to invest in what they understand and what they know. So thematic ETFs is certainly a trend that we've seen on our platform where people are engaged in, you know, for example, in innovation, autonomous vehicle, or even clean energy. So those are some of the things that we've been seeing. But of course, big tech, large cap companies, those are the ones that are popular on our platform. But what's important is the fact of the trend is that people are actually interested in educational resources. People who sign on to our platform, when we ask them what they're curious to, you know, what their goal is, it's to learn about investing. And when we offer educational resources and tools that provide navigation towards investing, it actually helps our investors, and we've seen them being receptive to it. Recently, last year, we launched diversification analysis tool that makes recommendations to users on what to purchase to diversify their portfolio better, to navigate some of the volatility and what they should assume in terms of accomplishing their investment goals. And we noticed that people have been receptive to that tool, taking our recommendations. And second, we recently launched Smart Portfolios, which is a way for us to manage portfolios on your behalf. So investment advice. I think what is seen is people understand what's driven them to start investing, but how do we take it to the next step? And it's through the receptive financial resources we provide, educational guidance, and the different investment products that they can take advantage of on our platform and other investment applications that can really shape how they're investing for the long term.
Okay. Thanos, have you seen any differences between investors from, you know, one country to another or different parts of the world?
I mean, I think traditionally, and this may be like a cultural aspect, right? That North America was always like the main driver of these initiatives. And if you look back, like both from a banking perspective, like the last century, but like more recently on the fintech sector, this is where a lot of like the investing apps started from, right? I mean, we've been talking about the last 8 to 10 years already. We've seen UK kind of very quick catching up with this. And this is like already a very competitive market in the UK. And gradually we see trends of both supply and demand on the sector in Europe as well. One of the things that we've seen as we are expanding into Europe the last few months, we've been getting a lot of demand around an investment product. People are aware of the investment product that we offer in UK. And this is one of the very first questions that we get on when are you getting the investment product in Europe as well? And as I said before, like I think this is driven a lot by the younger generations, like being aware of the opportunities that exist there beyond the borders of their own country, right? People do not see investments, let's say, in France. If you're like a French person, they can see like beyond that, and they can see that they can access opportunities around the world, right? And invest the money and capture like part of these opportunities by having like a diversified global portfolio, let's say. And obviously this demand will bring more supply from like investment apps and like relevant providers as well. So to me, like the very interesting part is now that we've made like investments accessible to pretty much everyone, I think we need to be really see how these get adopted and how people are using that, right? It's not like a sophisticated tool that like people that have been educated specifically on the sector will look at and essentially start using. We're talking about like the general public getting access to that. And I think it's important to realize that now this is like a consumer good offering, right? It's something that somebody wants to use to deliver value for themselves essentially and generate wealth, right? So I think, and that's where we put a lot of attention in Plum is making sure that, you know, people really understand the benefits and the risk of adopting such products, right? And again, US has been a bit more advanced from that part, right? People are aware of investments early in their life. It's like more of a widely accepted approach of investing money, taking the risk to grow your money. I think UK is following very closely, and Europe is now kind of ramping up from a demand and interest perspective as well.
So if I understand that correctly, it hasn't changed so much through the past, you know, with the traditional investment. Okay, it's more or less the US is a little bit ahead, UK is catching up, and Europe is a little bit far behind, right?
I mean, yes and no, in the sense that I feel the speed of change has increased a lot, right? Things that used to take years to change, now they change within months, right? Especially with COVID, sometimes even within weeks. So okay, it's just like I think the speed of change is what is important to take notice at.
Yeah, we'll take that because it's also the democratization of the part and what you are saying. But first of all, I want to ask Alex, because you mentioned about age groups. Have you seen any and younger people coming up and investing? Okay, have you seen any changes? Have you seen any differences between how, you know, older people perhaps are investing and younger people are investing?
Yeah, so just to add, sounds exactly correct in what's mentioned last. US is driving the changes, UK follows, Europe is then, and probably Southern Europe business hybrids are the last to follow the line. In terms of the generations, yeah, it was one of the first things we discussed today. So most of the net new retail accounts come from investors below 30 or below 40. So these are the new investors who drive this change. There are investors who are used to using Netflix, Amazon to buy products and stuff like that. So they're used to completely different experience. They are used to personalized experience, have control over everything they use, more holistic approach. I want something that solves my problem, not something that offers part of the solution. Do-it-yourself approaches, obviously, everywhere. And then it comes more, they're skeptical of authority and they consider themselves first-class investors, regardless if they have 1 million or £100 US dollars to invest. So this is, let's say, the new breed of retail investors. This will be the generation that will drive the changes in this market. As Thanos mentioned, the change will accelerate, especially due to the effect of the pandemic. But these are the features and the characteristics that companies, trading apps, investing apps need to take into account to offer this service. This is their client. It's not the 60-year-old traditional investor that was a target of a wealth manager or of a traditional institution. And that's why the products will be focused around their needs.
Okay, but you know, there's a question because I said they're starting to pop up the questions, and I want to invite everyone from the attendees to ask even more questions. We have some time. Okay, there's a relevant question about, you know, because Nicholas is saying that since the celebrity CEO movement of investing into crypto, okay, that was a nice one. Have you seen a decrease in users 18 to 25 for traditional platforms? For stock investments, that's the question. If you've seen the decrease, I heard that you've seen an increase of those kind of younger generations, but what it's also very
Globally, there
interesting.
is a huge increase.
Okay, but how difficult is for to educate them to understand uh, long-term investments? That's Alex, if you can answer that, and Mindy also.
Yeah.
Like, well, the thing about education is a little bit interesting. That's why.
That's absolutely a very critical point to try to educate the youngest generation of all, at least eligible to begin investing. But the good thing is that all these people, younger investors, have access to lots of information out there, and they're used to looking up for things on the web or different resources. It's easier to try to explain them the value of long-term investing, trying to explain to the 20-year-old than to the 60-year-old. Because the 20-year-old has 40 or 50 years ahead of them until their retirement to build their wealth. The effect of compounding is tremendous if you begin investing when you're 18 or 25. It's very different to persuade a 60-year-old investor that in 30 years you'll have an exponential growth of your portfolio. Right? We cannot go into details on how to do that, but obviously, and the approach we take on Wealthhood is that we try to educate and guide the investor on hands-on experience, everything put in the investing journey from the beginning, starting point, and through the whole step-by-step process.
Okay, Mindy, education is harder for the younger generation or is easier, as Alex was saying?
I think a lot of the access to investment platforms that are, surging in the U.S. is certainly a conversation opener. People who historically have not grown up in a environment where they talk about finances. I mean, for me as a young woman, a young kid growing up, I didn't talk about finances when I was in my family. So that's interesting now that there's so many platforms out there that really encourage the conversation, opening the doors to having custodial accounts, educational accounts for children. That's in the US, we have custodial accounts on our platform that allows the parent to start saving for the children's future. And as you're doing this, what's going to happen is you're going to have this conversation with your children, and then that way they know about investing and personal finances at a young age. And when they reach up age, they can actually have the tools, be empowered to take control of their investing and their financial future from that point on. So I think it's important that, now with resources available and, products like 529s, which are educational plans for our children, and then also custodial accounts that allow parents to save for their child's future, that opens the doors to conversations about what do you want to invest in? What are your thoughts about what companies you like? And then that transforms into a bigger financial picture.
Okay, there are a couple of questions. I'm trying to, just add the questions as well because they're coming up about ETFs. Okay, Mindy you were saying before that there was a lot more interest in ETFs. Am I right about that? So George is asking to Thanos and Alex if you are thinking of adding ETFs on your product. So yes or no? It's simple as that, I think, the answer.
Absolutely, yes, for us. It's probably one of the best innovations for the financial markets.
Thanos?
Yeah, from our side, we already offer funds on the platform, and ETFs is another set of things that we plan to introduce in the next few months, essentially. And it's, as mentioned already by Mindy, right? There's been a huge growth on the ETF offerings across the world. So there is a lot of options for the users to really invest on the sectors or like the segments or like the types of instruments they want to invest in, essentially, in a very diversified way. And this is something that our customers have voiced as a request as well, and we plan to deliver something like that in the next few months.
Okay, but there's another question about ETFs. Perhaps Mindy will be more suitable for that. I don't know. You will say to me. There's from an anonymous. In Europe, many platforms only offer just ETFs rather than single stocks. How much demand do you see customers asking for specific stocks in the UK, for example, rather than in a broad market ETF? So I don't know who wants to ask them to talk about that.
I can highlight a little bit of what we see in the US specifically. We do see interest in stocks, single stocks, mainly because, people buy products from companies and they're familiar with, right? Like, so, I shop at Amazon, Apple, I know about Google. Those are the companies I want to invest in. And there's a lot of relationship with what you know and what you're familiar with and what you tend to invest in. I think what's happened too is, like I mentioned, there's been a lot of ETFs out there that play to that invest in certain themes that really engage interest in general, right? Like in the US, we have this focus on infrastructure spending. So electric vehicles, for example, is a theme that people are trying to invest in. And instead of the thought about what individual stocks to buy in, people just find it's easier to diversify by buying this thematic ETF that invests in this whole landscape. So I think with the proper education and the fact that people are now finding that there's an ETF out there for any kind of exposure that you want, whether it's US companies, European companies, there's an ETF out there for there. So that allows people to have access and choice. And so we've seen both being equally requested on our platform.
Okay, someone wants to add something, Alex or Thanos?
Yeah, so I mean, one thing that we've noticed from our perspective, right, from Plum is even though like all our investors will invest in mutual funds that give you like good diversification across different companies and assets as well. There's been on a survey we did like late last year, we got like more than 60% of these investors said that they would like to have the option to invest on a specific company. And I think this goes back to what Mindy mentioned previously, right? Everybody knows, like, especially on the big tech, I think it goes along with like the young people that are like the main group of investors that are coming up the last few years is, you know about Amazon, you know about Google, you know about all these companies that you use on a daily basis pretty much. You feel very strong about their future and you want to kind of be part of this, right? Invest in that and get part of the growth, right? So there is a very clear indicator of people wanting to have the option on getting like full essentially access on a specific company stock.
Okay, okay, let's a little bit the question. So I will go with that because it's really interesting. Because we were talking about, there's a trend. What you were saying more or less is that during especially the last month, but that was accelerated the trend by the pandemic, that we see small investors coming up and, be part of the investment community, something we didn't see in the past. And also you three you work for, startups and companies that they're helping toward that trend. But there is also a lot of companies like that. So can you comment a little bit about that trend and also how you differentiate between each other sometimes, because that's also can be a little bit confusing. So who wants to start first? Mindy? About the
Yes,
differentiation? Yeah.
sure. So it is important, we're seeing the fact that we've actually allowed for fractional shares, which means that you can buy slices of stock, slices or shares of stock. So you don't have to spend like, for example, 3,000 US dollars on a single share of a company. I mean, that hasn't been affordable for a lot of common investors, and it's also created barriers for people to start. You get intimidated. How do I create a diversified portfolio if I spend $3,000 on one stock? And I think what's happened is, with access to a lot of these various platforms, it's this competition has increased the different resources that are available. But also what has been a differentiator for us is we are a fiduciary where we aren't a day trading app. We're here to provide guidance, and we're very upfront, and we, tell you about that, and you experience it as you're on our application, right? We don't have trading. We have trading windows. We don't, we have 4 trading windows where your trades get executed throughout the day. And again, we don't have options, things like that. So we are here for the long term. We want you to invest for that, diversified matter. We're not here to recommend that, you day trade, you speculate and perform all those actions. So it's kind of the way that we are trying to separate ourselves from our competition, because we want to be acting in your best interest. We're creating products like smart portfolios, diversification score that really guides you to make that best decision that you can make at that moment in time. So that's really our differentiator there.
Okay, Alex?
Yeah, so I have to add here that the market in the UK and Europe is much different than the market in the US. In the US, it's more established. There are many players, and the offerings are more concrete and complete, let's say. In Europe, obviously, there are many players, but there's still lots of room for improvement. Now, when it comes to us, we try to differentiate by taking a different approach. Obviously, we are do-it-yourself wealth building app for long-term investors. But what we do differently is that we aim to have a more holistic approach and a top-down approach. So coming back to the previous question, we use ETFs to help users create their portfolio. So they start from a well-diversified portfolio and then break it down to its components or individual stocks. So we place the portfolio in the core of the investing experience. And another way we try to differentiate from competition is that we want to add interactive guidance. So guidance, feedback, and insights during every step. Any click the investor makes, we provide guidance and feedback on how this will affect and influence their portfolio. And obviously, hands-on education, that is the core part of what we test for, core part of how we can persuade people and build the right long-term mindset.
Thanos?
Yeah, so from a plan perspective, I think what really diversified us is like it's twofold, right? One is, I mean, we're taking a different approach on the educational side. Like Plum is action-led. Essentially, we're not only talking to customers, trying to educate them on how to save money, how to invest, we actively save for them, right? By using Plum, essentially, you can automatically save, and we can adjust your saving based on your spending patterns. So we can optimize for maximum savings, and potentially like maximizing your savings will lead you into investing more, right? The second thing is we're looking again from a holistic approach, like slightly different from the holistic approach that Alexandros mentioned before, in the sense that we're not a pure investment offering. We look into the financial life of the user as a whole, right? We're looking at the user from the point where they start saving. We actively help them save. We help them monitor their spending. We give them the opportunity to reduce their spending by reducing their bills and by notifying them more opportunities to switch bills and decrease their spending that way. And ultimately, these savings are invested in funds where they can grow, taking advantage of the compounding effect, right? So essentially, it's the action-led approach of Plum, as well as like the holistic view of your financial life as a whole, right? We see Plum as the autopilot of your personal finance as a whole, not just the investment part.
Okay. There is a question about the social network of effect, but I think you covered a little bit of that. There is a question about crypto. Okay, and perhaps there are a couple of questions. Okay. If you can let us know what are your thoughts on crypto investments and how this affect the existing investments?
Yeah.
Okay, so you are going to start about that?
I can take that. Yeah.
Okay.
So obviously the crypto market is booming. Bitcoin is, I think it's 55K today. It's almost 800% higher than it was last year, same time last year. And the total market cap is 2 trillion. It is huge, obviously. What has led to this expansion? Many different things. One main thing is that you see an adoption by major financial institutions. So this is Fidelity, for example, is offering Bitcoin custody. Goldman Sachs and Morgan Stanley are also thinking to offer cryptos and crypto offers to their clients. You see companies like Tesla and other companies investing or buying actively Bitcoin. And this obviously drives the demand that drives the price up. The other effect is what we described in the beginning, very crowded popular trades. Retail investor who speculate, buy into the trade, probably later than they should, causing all the prices to go up. Now, we've seen Dogecoin rising about 400%. I think it was in the week or from the beginning of the year, it doesn't matter. These are not positive sides for the crypto market. it's definitely not healthy that a coin that started as a joke on the internet being like 50 billion in market capitalization. If you ask me now to summarize, I think in the next 5 or 10 years, the crypto market would be higher, but it will drop before reaching these levels. A correction is necessary to revert a bit to what actually matters on this decentralized economy.
Okay, Thanos.
So yeah, I mean, a couple of thoughts around Bitcoin from my side is, I mean, first of all, Bitcoin started as something totally different to what it is today, right? It started as a currency, essentially, like a distributed currency in the way of allowing people to exchange value without going through central banks. It now has evolved into like a very major investment asset, right? I think there are like a tons of articles on the web talking about how much people invest, but now how little they use it for exchanges and like an everyday payments, right? It's definitely something that we look at that and we pay a lot of attention. Now, it's definitely a very volatile asset, and there are a lot of question marks. I mean, on the market around, you know, if it's like an asset that people should invest in or not. But I think that an important aspect there is something that has triggered like people attention, and I feel that it's better for people to get educated about things, understand things rather than banning things. So people should be aware of the risks and the opportunities of crypto, or like the technology that is included within crypto before making like a decision to, you know, follow that or like put their money on that, right? It's definitely a trend that will continue. And Alexandros may be right on, there may be more ups and downs. There's been like the first peak of crypto was like in 2013, right? When Cyprus went into bank restrictions and people started thinking, you know, a European country is imposing like capital controls, banks are losing their trust, and that's where Bitcoin crossed like the $1,000 mark, right? There was a second peak around 2017 when it reached like 18,000. No, I think it was like $19,000 at that point. Now today we're like the 50, 55, and there are a lot of ups and downs. There will probably be more, but I think the adoption of big companies and institutional investors may get to a point where it becomes a more mainstream asset in the near or far future, right? It's fairly difficult to say when exactly, but it seems that there is a trend towards adopting further the technology for this kind of assets.
Okay, there's a couple of questions, and I will go that for Mindy about how many portfolios should you pick at any one time? What will be classified as too diversified? I don't know how many. That's the question. It's also about Thanos. We're asking about Plum FinTech, Plum specifically, but I will go with Mindy first because it was a more general question, and then you can answer as well if you want.
Yeah, there's been you know, questions about like what is the appropriate amount of investments in your portfolio in order to be deemed as diversified. There's research that shows out there that, you know, you need at least 25 stocks in order to create a diversified portfolio. You hear 25, 50, or, you know, there's a lot of numbers. But now it's the fact that there's funds like exchange traded funds, ETFs out there that now it's a quick and easy way to diversify your portfolio by buying one investment. So, you know, one ETF can have 30 stocks within it, 500 stocks within it. There's a lot of options out there that allow you to diversify your portfolio in a quick and an efficient manner. So I think it's really about, number one, figuring out what is your investment goal, setting guardrails of what you should be invested in, how much stocks versus bonds in your portfolio at this time, right? Like someone who's younger, they can, you know, subject themselves to more risk. For more growth, you can actually have a higher portfolio of stocks and versus bonds. So I think understanding that as step one, what is your portfolio looking like and what it should look like? And then number two, thinking about the investments that go within your portfolio. It's easy because now there's options. You can buy an ETF to quickly diversify. You buy a single ETF, your portfolio is immediately diversified. So I think it's figuring out your financial goals, creating the parameters to create your portfolio, and then figuring out what goes in there. And you don't need to buy, you know, a lot of individual stocks. You can use efficient vehicles like ETFs.
Panos.
So, I
And there
mean,
was a special for you. Okay,
okay.
it was using Plum Invest. Then it was more general. I want to ask the others as well, because I think it's an interesting question.
So in Plum, we already offer mutual funds, right? Which is essentially groups of investments in multiple stocks or combination of stocks and bonds, right? So as Mindy said, you can even have like one fund holding, and this may diversify you in a global setup as well, right? I think what's important there is to really understand like the risk, and like all the funds contain like a risk rating around, and it's mostly driven by how much of the fund is invested in equities versus bonds that give you like more of a, risk return different profile there. But also is, if you want to diversify within a specific region or within a specific sector or not, right? So there is kind of it's up to the personal preferences of a user, right? Let's say if you want to have like a very heavy portfolio on tech, but you do not want to put all your money, let's say, in Amazon, we have like the tech fund where you can get a good exposure across the tech sector globally, right? Or if you think that you want to have diversification but still constrain your investments within North America, we offer like a geography focused fund where you can invest in like US stock, but without picking up specific stocks, right? And this will diversify your investment across hundreds of different companies, right? So I think diversification is not a problem at all, right? I mean, customers can do that, as Mindy said, with a single fund. I think it's more like of a personal preference and a personal strategy, or let's say if you believe that there's going to be like a trend in North America or Europe or in a specific sector, and you believe like as we saw like during COVID, people really understood that technology is going to be on an advantage, giving like the restrictions of COVID against other industries, and they benefited from this, right? The fact that technology companies as a whole did well. I mean, if you look on the details, some did better than others, right? But by buying like a tech fund, obviously, on average, you follow like the overall sector trend. So you can do that by picking like one or more funds, pretty much.
Okay, Alex.
Yeah, very briefly, I'd like to say that you may have thousands of different assets and they may be correlated with each other, so you're not diversified at all. Or you may have one asset, a very well diversified global ETF, and then it's very diversified. So it's not only the number of assets, it's not only the number of different geographies or asset classes, it's mostly how correlated the underlyings are. So this leads us to the fact that you have to understand what's driving the moves in your portfolio. Again, going back to education and going forth to the fact that the more the better, but the more in different diversification areas. So you can diversify in asset classes, in different geographies, in different sectors, investment themes, and obviously within that you can adjust it to the risk level you want.
Okay, we have a couple of questions. I will take just one because we have to finish at some point. Okay, the question has to do because it is related to what we're talking before, because you three represents applications and services that it's made for everyone, even someone that doesn't know, perhaps it hasn't been to a finance university or something like that, can invest. Okay, so the question here is when it comes to user acquisition in a business field like this with so many trading apps, does it help to have the release of more features? Does it help to have more and more features available, or you have to be a little bit more simple? Mindy, I don't know.
I think we found that with our investors, there's a variety of experience. Some people are more sophisticated and they want more features. Some people are new first-time investors. Simple is better. So I think what we've done is we've tried to create different journeys or customizations for people to experience on our platform. So that way, no matter what type of investor you are, there's something that fits your needs. For example, someone who's new to investing doesn't know where to start. We have a stock back reward card that is linked to your bank account. So every time you swipe, you're receiving shares of a stock of a company that you just made a purchase from. So instead of effectively creating your portfolio, it's organically being created. And with the educational resources paired with it, once you feel empowered to start, the next step we have a diversification analysis or tool that allows us to guide you to fully create your portfolio. So that's the second step. And then third, if someone doesn't want to manage their investments, we have smart portfolio products for you, or you can have a combination of all of the above, right? You can have stock card, you could have your own do-it-yourself portfolio, or you can have a smart portfolio where we manage on your behalf. I think it's about creating useful products that make sense, and no matter where you are in your journey and your investing experience, people can feel that they have the resource to adopt it, and they have the option to create that customized journey for themselves.
Okay, Alex.
So for us, we're the youngest company of the three, earlier in the journey. Obviously, we're not in the stage to offer thousands of different features, but for us, it's very important to offer a concrete value proposition. And so to our users and investors, how we can guide them to build their wealth seamlessly over time. So when it comes to user acquisition, it's one step before that. So we create content, educational content, stuff like that on social media. We try to provide actual value to the end user even before they join the platform. Once they join the platform, we try to persuade them and have a very robust offering, persuade them that we can actually help them and provide value to them.
Okay, Thanos, your opinion?
On this question, right? In Plum, we take like a first principle approach, right? It's not that much about the features; it's about the customer problem essentially, right? And this ties into the fact that we have a lot of different customers with different needs, either because they're in a different stage of their life or because they're in a different economic situation, right? And we need to make sure that we really solve their problem. Now, the outcome of that is obviously like getting more features delivered, but always with the target of making sure that we provide like a very personalized service that really solves the specific customer's problem, right? So, and as we said like previously, like expanding into like this consumer space where each individual not only has the needs, but they also feel empowered to get their needs served. It's really important to give like the solution that they're looking for, right? So instead of talking about the feature, we need to talk about the problem that we solve for the customer. And that's the approach that we take when we're thinking about what next to do.
Okay, that's really, really interesting. So I think our time is up. Okay, there are a couple of questions more, but I think they can find you on LinkedIn or whatever. So I think we talked a little bit. We saw the trend. There's a little bit different environment, the investments part. There was a trend. Everything was changing. With the COVID-19, there was an acceleration, I think, at least in my opinion. I don't know if you agree or disagree, or you want to make any last comment before we close this talk. I don't know if there's any final comment. Mindy, Alex, Thanos?
Just a quick one. It's a very interesting landscape, and we're very excited to participate in this one and shape changes in the future.
Okay, Mindy.
I would like to add exactly that. We feel hopeful, and we're so excited that we are empowering a lot of young first-time investors to join the platform and to just start investing. I think that's the first step in this financial equality.
That was a nice one, the last one. Thanos.
Yeah, from our perspective, I think we want to take the positive out of the whole COVID situation, which has been bad for everyone essentially the last year, and try to see and monitor essentially how customers, now that they have taken control and pay more attention on their finances, how they continue to do that, right? And look at that as an opportunity to educate people, give them access and the tools to keep growing their wealth moving on, like post-pandemic.
Okay, that's really nice, and I really loved your last comment. So thanks very much for participating in this talk, and thanks everyone who was attending the event as well. So thank you, and perhaps we'll see you in a next talk. I don't know, Thanos, you are the host. I don't know if we're going to do anything like that. Perhaps not with a COVID-19 theme. At least that, okay? Great. Thanks very much.
Thank you.
Thank you.
Thank you. Thank you, Plum, for hosting us.